Welcome back, and thank you very much for staying with us. My name is Colin Limawa. Now we're going to focus on key deliverables of the investment summit that is underway at the Sandton Convention Center. And of course, to convince that South Africa is a preferred investment destination, well, we need to get an assessment from Dr. Azaar Jamine, who is a senior economist at Econometrix, to actually expatiate on this ploy for South Africa to lure investors into this country. Thank you very much for coming to our program.
Pleasure, Colin.
Right, so we are in a country that is in a technical recession, but it says that it's determined to curb its expenditure levels. It wants to also make sure that it manages its debts very well. Is that a projectable image to lure investors when you are in that kind of a situation?
Well, it would be ideal to be able to talk that way, but 3 days ago we had the medium-term budget policy statement which said that we are not currently determined to curb our expenditure and to control the increase in our debt levels. And so one of the ironies of today is the fact that you had President Ramaphosa trying to mull up support for a big investment into South Africa, and you had Moody's coming out at the same time and saying that their interpretation of the medium-term budget policy statement was that it was credit negative, which implies that people are now starting to think that we are going to have a downgrade by Moody's to junk. Remember, they are the last a ratings agency that hasn't downgraded us to junk, but now it looks like there's a chance that they will, and the rand weakened significantly as a consequence. And it's ironic that this took place on the very same day that we had this rah-rah to try and attract more investment.
Certainly, I mean, like we've heard Fitch saying that the budget doesn't really show that it's going to be a credit positive at the moment, and secondly that this kind of reprioritization of the budget is not really going in essence to stimulate growth in the country.
The reprioritization of expenditure in the short term is not likely to have a major stimulus. You've got to bear in mind that to get a stimulus you need new money coming into the economy, and what the government's really talking about is just switching the focus of attention from one area of expenditure to another. That can help, most definitely, but it's not going to result in a sudden boost to economic activity.
Well, even though things are not looking good for the South African economy, with a minus 2.2 GDP that was recorded in the first quarter of the year, but while the summit is taking place and we can take a look at some of the investments that have been announced that are coming in the country, some of them have been announced this morning by the president, as I'm waiting for the director to display them for us here at the moment. But then with them showing in a jiffy, or there they are there. We have Mara Corporation in Rwanda, which will invest 1.5 billion rand, and of course RAIN, given that 4G is coming out of style and will be having to invest in new technology for the 5G network, 1 billion rand there. And of course there's another company, Mondi, going to invest 8 billion rand through ongoing export commitments. Given that this is happening during the investment summit, is this not really showing that there's a light at the end of the tunnel?
Well, you've got to bear in mind that investment is not collapsing completely, and that is because businesses have to carry on running and planning for the future. And some of these, what is unclear from all these commitments is how much of that is brand new as a result of the investment summit, and how much of it is commitments that have already been made. I mean, Mondi's referred to ongoing export commitments. So it's investing to carry on with these ongoing export commitments. Is this new investment, or is it simply investment that was already planned and is now being announced open publicly?
You could be right, because I'm looking at this one of Mercedes-Benz having committed 10 billion rand. We knew about this a while ago. Anglo-American, a very significant highlight of the investment announcement here, to preserve 72,000 jobs. It will take about 71.5 billion rand to sustain and extend the lives of its mining operations in South Africa.
That's a big one.
The issue of mining in South Africa and sustainability.
Yes.
Take us through that.
The problem that South Africa, we've got a lot of minerals under the ground. The first problem is some of them are too far under the ground which makes it relatively unprofitable to extract that from, compared with those minerals, especially in gold and platinum, compared with other countries. The second problem we've had is a huge increase in the cost of labor in the mining sector, way above inflation over many years, which has again made us relatively uncompetitive. The third problem is the cost of electricity that has risen, well, a few years ago, rose by 400% in the space of 5-6 years. That also contributed to the uncompetitiveness of the mining sector. And then there's emphasis on mining safety, which is very costly. And over and above all this has been the uncertainty about what the requirements are to get a mining operation going in South Africa. And because of the inability of the mining sector, together with the government, to reach an agreeable mining charter. And so investors are unclear as to whether or not it's worth coming into South Africa.
Something that's very significant to talk about during luring investors. Somebody earlier talked about the importance of local investors. Looking at this one, SAPI investing 7.7 billion rand, Patrick Makesha from Platinum Mine, Eventplatz 4.5 billion rand, and Bushveld Minerals 2.5 billion rand. The essence of having local investors as part of the social partners to really speak at investment in terms of local and international. How important is that?
It's vital to get local partners to invest, because international investors are going to want to see this happening before they commit to investment. What is probably the most encouraging feature about this investment summit is a determined effort on the part of the government to actually draw in the private sector with it. Under the previous administration, there was the private sector was treated as the enemy, and there was not going to be much investment in that environment. So the attempt is to change the environment to make locals want to invest more in South Africa.
In terms of human capital, we've been bleeding jobs. Our unemployment rate is very high. We need to, in essence, look at who's been losing jobs and the people who are unemployed right now. With the kind of investment that's coming in, are we sure whether or not those who are on the unemployment line are qualified and having the requisite qualifications and experience to do the jobs that will be available to get the economy going?
Colin, the answer is probably a bit of each. There will be some jobs that the people who are unemployed will certainly be able to move into if we get this appropriate investment. There will be other jobs that they won't be qualified to do. And it's a mixture of that. South Africa has a shortage of people with the requisite skills to do certain types of jobs, and an abundance of people who are relatively unskilled to do some of the other kinds of jobs. And mining is the classic example of that.
We also have a question regarding labor stability in South Africa. What does the South African labor market have to offer, irrespective of the high above inflation wage demands, and also, industrial action in this country? When they go to the streets, they mean it. When they demand what they want on the table, they want their percentage.
Unfortunately, especially this year, we are seeing a surge in labor unrest, and in particular in militant and destructive labor unrest. A lot of the strikes have been unsolicited and have entailed actually damage to property. That is not conducive to attracting foreign investment. Over and above, what labor really needs to do to become more attractive to be employed is to improve its productivity, and that requires a different work ethic, but also the requisite skills. And unfortunately, for the last few decades, we have not generated the skills in the broader section of the population that are really appropriate for the kind of work that we need.
Dr. Jamine, thank you very much for your time.
Pleasure.
All right, Senior Economist at Econometrix, Dr. Azaar Jamine, talking about the Investment Summit here in South Africa. We're going to take a break, and when we come back, the program continues.